Hi everyone, it's October 28, 2022. You are watching the Awesome10X Global Market Update. It is also a free Friday class. Every Friday we do have this YouTube channel update, unless I'm away for travel reasons. It's October 28, 2022. So the title is The Bears Coming Back with Rampage, Waterfall Selloff Continues. Let's assess the impact of the damage that's happening towards the US and the Chinese markets. And let's also take a look at a lot of charts as well as next week's earnings indicators. So let's start and go ahead. Okay. So we're heading towards the second week since we actually sort of bottomed out in the short term, or a bear market rally ensued from October 14 till about October 28. We're seeing it actually get stomped upon because of massive earnings sell-offs coming from your fangs. So let's talk about these waterfall sell-offs. So we had this week Microsoft, Google, Meta, Apple, Amazon reporting numbers, and we saw how Meta dropped 20% after hours, Amazon dropping 17% after hours. You've seen Microsoft and Google both slashing down 10% after their earnings reports. And you've got Apple, although it's unchanged, it is still down about 2% from its peak. So today, though, you will get some numbers from ExxonMobil and Chevron, which is and Equinor already reported. So most of the earnings in energy names actually did well. So everyone who hid in energy stayed strong. And all of these actually also did well. Enphase, Archer Daniels Midland, Nexira Energy, Cameco also did well, but the market sold off even after good earnings. Take note as well that Coca-Cola, Colgate Palmolive, Kimberly-Clark, Honeywell, in general, these names did well this week. Sherwin-Williams actually also did well. That actually surprised me. One of the key surprises this week was actually Shopify rising 17% last night, Wingstop rallying 20% over cheaper chicken prices. You've seen Visa rally as much as about 6 to 7% after a beat. MasterCard comes out tonight. McDonald's rallied more than 10% from the lows. Chipotle was down after numbers. You'll be getting these numbers coming out next week. There is no such thing as a holiday about November 1 being All Saints Day. The market is still going to be trading next week, and you've got these companies reporting numbers. Mondelez and Yum brands, in particular KFC, Taco Bell, Pizza Hut, whether in the worldwide or just the Chinese, both of them are reporting next week. Yum and Yum China. You've got Cheesecake Factory, Papa John's, Shake Shack reporting numbers. Ruth Chris Steakhouse also reporting numbers, just as Starbucks is. Amongst your energy commodity names, you've got Sunrun, Suncor Energy, Phillips 66, CF Marathon, Nutrien, Albemarle, all reporting next week. All of your lithium commodity names next week are reporting. Next week, you also have travel-related names reporting their numbers from Booking, Marriott, Airbnb. Companies that are continually losing money are still going to be reporting next week, such as Coinbase and MicroStrategy, SoFi, Robinhood, PayPal, and Square. So you'll take a look at how the fintech and the cryptocurrency movements are for next week. You've got streaming names also reporting, the smaller ones, Roku, Fubo, and Paramount. Amongst these three, both actually all of them are in a challenging environment. So we expect actually a lot of nasty numbers probably coming out next week, save for the fact that Fubo TV, which is a very niche streaming small play, can actually outperform, as you can see from the past numbers. DraftKings and Uber, it's a matter of whether they are controlling costs. We'll see about that. You've got Mercado Libre, eBay, Etsy reporting. So e-commerce names are reporting further. So there could be some upside, just as what happened with Shopify. But with overall headwinds happening in Amazon, there's a lot of risks if e-commerce names like Amazon is having a hard time with consumer spending names, especially e-commerce in Latin America and even in the US, would they continually fall after Amazon's numbers. You've got Qualcomm and AMD next week. You've got Twilio, Cloudflare, Atlassian, Datadog amongst 1,000 plus companies. You've got 1,212 companies reporting next week. So these are just a handful of the companies that I'm taking a look at. And from the likes of the numbers coming out, from the types of names that are reporting next week, we're going to still see selective stock picking in the market where other companies fall 5 to 10% south. Others probably could actually get some squeezes. Let's take a look on the charts here. First on the FANGs and then to the rest of the market. Alphabet, as you could see, Google after hours, after their numbers from 104 fell to about 96 and continues to sell off, especially after Meta's numbers came out. So from 96, it fell to 92. Do we break 90? Do we hit 88 for Google? Let's just first watch and then as you could see, the market is today's a Friday, and usually weekly closes on the lowest is actually very, very bad. Although you can see that huge volume sell off, noting a lot of capitulation also happening towards your fans. Microsoft, very strong volume on the gap down after earnings from rallying from 226 to 250. We're now trying to break down to new lows for the year, breaking maybe 220s, and after that we go to 200. So still a nasty sell-off for Microsoft. Of course, my Amazon is on fire on the downside. Amazon CFO Brian Olsavsky said, "We are seeing signs all around that, again, people's budgets are tight, inflation is high, energy costs are an additional layer on top of that caused by other issues." In terms of good numbers, CCJ, a uranium of the world, reported actually estimates better. Revenue came in $389 million versus consensus of $330 million, and they mentioned a lot of contracts on their uranium. This is also a very fiery tweet. This tweet was deleted by Larry Summers, although so many people have retweeted it. For everyone, I think Larry Summers is a key Twitter Twitter to follow. The history of developed countries since 1970 is very discouraging about the prospects of bringing down 8% inflation. You've got CPI report coming out November 14. Historical experience may actually be too optimistic as a guide to the present moment. Populism has never been stronger. Labor markets are super tight. Government debt ratios are at peak levels. Globalization is certainly no longer spreading and may be receding. Almost never does high inflation come down fast. Today's consensus view that inflation will come way down is, as this figure from Jim Reed at Deutsche illustrates, outside the range of normal historical experiences. So dots are Bloomberg consensus. You're seeing that these people who are thinking that inflation has peaked are wrong. That's what Larry Summers is saying. And even if it falls, it will stay elevated above 10 or even 12% if we're looking at where the median in the past is. From 1970 for developed market countries, this means USA. It doesn't even talk about the dollar strength affecting emerging markets even worse. So for instance, emerging markets could actually suffer even worse than 10% inflation, could be 15% or worse. Credit Suisse reported numbers just last night, down 20% after hours. And if you take a look at the chart I just tweeted, you may think that it is a shit coin, but it is Credit Suisse, down to 95% from their peak. So I guess it goes to penny stock levels. People are assuming that Credit Suisse goes similar leeway into a Lehman Bank, wherein they get bought out or it goes bankrupt. So a lot of people who has assets in Credit Suisse has been exiting their liquidity, and Credit Suisse is actually towards a plan to raise $4 billion. We don't know how much dilution Credit Suisse will even continue. But you can see that they are creating a capital release unit to wind down their non-strategic, higher risk businesses, announcing a sale of a large part of their securitized products business. They reported a third quarter loss of more than 4 billion francs, Swiss francs. And once a symbol of a Swiss reliability, you could see that the Credit Suisse reputation has been tarnished by a series of scandals involving money laundering for criminal gangs. The bank had been rushing to raise money, freeing up capital, selling assets, keen to limit how much cash it has to raise from investors just to fund its overhaul. handle their legacy litigation costs, and retaining a cushion for rough markets ahead. So, for those who are looking to see more volatility in the financial assets, you might want to check out Direction Financial Bear. This is FAZ. This is a triple levered fund. We've seen how the triple levered fund has gone from 31 to 21 recently, owing to several good numbers coming out, well, better than expectation from JP Morgan, Bank of America, Wells Fargo. We argued that the intact uptrend here of the bears is still there, and so actually at the lows here of 21.64 to 19, that is one thing that you can do at pre-markets or during the 9:30 to 10:30 p.m. Philippine time for the opening of your US markets later on. Further deleveraging of the market on the US market sell-off or the Chinese sell-off could actually make financial stress towards the bank. So you might actually want to take a look at owning some financial bears, housing crash on and on. So far, I did try to nibble. You've seen how the Hong Kong stocks were demolished on October 25. I did buy on October 26. Markets rallied October 27. As of October 28, Friday, you can see it's getting demolished. Here's a live look on my Hong Kong dollar account being killed right now. Actually, a while ago, only HK5 and 883 HK remained alive, which was just a Chinese bank and just a Chinese oil company. So far, in terms of resiliency, my 941, which was China Mobile, still stayed and hung on a little. JD, which is 9618, managed to hang on, but actually down 6% for the day. You've got a lot of Chinese companies, including Nongfu Spring and including Yum China getting killed there. You've got 1211 BYD, massive bleed. This is the Chinese electric vehicle, so more volatile. Ganfeng Lithium was also sold down. 9988, which is Alibaba, was also sold down. I'll show to you later pre-markets on Chinese issues that are listing under ADRs for US American Depository Receipts. But this is so far the monthly of Hang Seng Index. It's actually selling off with a close below 15K at 14,833 as of a while ago. So we've not seen this level since the 2008 crisis. So in terms of early capitulation, the Chinese markets are already doing that. Basically almost every gain for the last 14 years in Hang Seng Index has been killed in just a year. So there. So from 30,000 here, 32,000, we are dropping close to 11,363 to retest that either next month or next week. Well, next month is already November. We have to see on whether we close towards another 2,000 points down for Hang Seng Index. We should note that the Hang Seng Index was sold off very massively this week and this month, owing to Xi Jinping getting a third term on with the Communist Party. Okay, so let's take a look through a lot of charts here, guys. Yeah, all the tech failed. Agree. Disney reports number is November 9. So next week it's really more of a travel related sector, and a lot of still some staples, some consumer staples. I would also like to share that in my eToro account here, I did make a lot of gains. Last night, I did take some profit. So you could see that most of my cash is higher than usual. I have some trail stops on Coca-Cola longs, Pilgrim's Pride longs, Equinor, Vet, Vermilion Energy, and Valero longs. I've seen a lot of good numbers. So all of these actually beat earnings. Vermilion Energy reports next 2 weeks, but all these four actually already reported and all of them were doing well. Nonetheless, I think that the problem here is that even if some companies are doing well, which is what happened to CCJ, it's still sold off, I think, 3% or 4% after hours, as most people would still want to hide into cash. Just wanted to answer a few questions here. Any thoughts on 25 days worth of diesel supply remaining some days ago in the US? Well, we believe that energy stocks are actually accelerating to all-time highs. That's one of the reasons why we've been betting quite since last 2 weeks pretty strong moves on your energy names. So let's show you what's been happening on the energy names. Actually, energy stocks have been outperforming over the last few months. You can see that this was a consensus long. And this month, not only did energy stocks go very bullish, but it actually is tempting to even make all-time highs. So XLE is off to a potential move towards 99. And your XOM and CVX, Chevron, which are reporting this week, are actually closing at all-time highs. This is your ExxonMobil closing at 107. That's a close above its all-time high. You've got Chevron also trading at all-time highs. We're closing weekly and monthly at all-time highs, which really bodes very well for your energy names. We already saw actually very strong numbers. So Hess actually is closing at an all-time high here. So you might be actually wondering, with energy stocks closing at all-time high, why would I actually close my energy longs? Because I have some gains on Cenovus Energy. So all of my longs on energy actually profited. I actually think, how could you actually lose an energy, right? So I don't think anyone who has a long energy is losing money. So it's all about whether they want to take profits towards cash or just keep on holding and trailing their longs. From a trading standpoint, we don't think there's any reason to really sell. In fact, one of the reasons why 883 in Hong Kong still managed to be just down 1%, or I think I was even unchanged on my longs on even if it was listed in China, is the fact that all energy stocks, regardless of where they are, whether in UK, whether in Brazil, whether in USA, or even in China, all energy stocks worldwide are making all-time high profits, and the stocks are actually responding with all-time high movements as well in the stock price. Buybacks galore and a lot of dividend repurchases. Take a look at Cenovus Energy, actually trading with a very good move, closing at $20 from about 16, 17 here for the month. I do expect it to actually close November still above 20. So just in case that you are not really interested to take profits on your energy longs, I don't think there's anything wrong with that. It's really a matter of time frame and your trading strategies. Okay, as I do believe that we are still in an era where volatility remains supreme, and anyone who can actually take profits 10, 15% in a very short amount of time. Some energy names went 30%, 40% within just a month. And there's nothing wrong actually for some people to be taking profits, just showing to you what the movements were. It looks like just a small move in a month, but if you take a look on this on a daily, Hess has gone from about $100 to $140. That is a 40% move from September 27 to about October 27. 1 month, 40% up for that. Let me show to you the movements of the energy stocks that I've been watching and also trading. Here, shale related names. Okay. Okay. So performance, just for the month, you can see that there's been a very strong move, right? So Matador 35%. Matador hit all-time highs after good numbers. Mara, as you can see, no, which company lost money for the month in the energy? None. So it's a 100 over 100 hit ratio. Energy longs, whether it be Nuvista Energy, Matador, Marathon, APA, Hess, Cenovus, Philips 66, Meg, Canadian Natural, Diamondback, Devon. So even if you were just betting for the earnings this month, as the entire market of the S&P 500 was hitting new lows, the market actually hid and continued to hide in safe haven place like energy. So Occidental Petroleum, which is already up 147% for the year, still managed to gain another 15%. So you can just see that the market continues to stay hidden in all of these energy plays. I should just be careful though, because you are not buying it in an oversold area or a support zone. Nowadays, Occidental is nearing 75 area. You can see that from the chart. You might get some selling pressure at 75, 76. And this is actually true not just for energy names, but also fertilizer names. Take note that Archer Daniels Midland, despite having very good earnings, seems to also have some profit takers here at 97, 98, just like before. So usually, despite the overall commodity strength, and I'm not saying that commodities will actually fall, or nor would I actually say that the energy stocks are topping out. I do believe that there's nothing wrong why people who are long energy, because this is a crowded trade, will also be trying to trim and take profits, even as the gains may continue. So either you will trail it or you will actually take profit. There's no such thing as shorting energy stocks for the moment. Okay, another thing to take note of. Yes, big tech has been massively underperforming, as all of I mean, in plain sight. This is what's happened on your big tech. So your big tech, Meta, Amazon, Apple, Google, Microsoft, Netflix was the only one who managed to outperform, but it is already selling off from the $305, as other people are also trying to short even companies that have outperformed. Take note that Netflix here is already showing the first signs of possible exhaustion, as it's trying to close near that gap at $330. So although Netflix can still continue to rally from 296, say, to 330, the upside may be 10%, but the downside can go as much as $250 back to where before the earnings came out. So you could argue that there was a gap entry here at 250 after the gap up on the numbers. That was a breakout, but usually those breakouts could fail when you are in a bear market. So I would say that for people who are looking to short Netflix tonight, whether at 296 or even as high as 330, that might pay off. So today we're actually talking about a couple of companies to actually be on the short side. Let me show to you that. So FAZ is one way. FAZ is an inverse fund for the banks. And the reason why we want to look at that is because most of the banks have already played out the good earnings and have already rallied quite significantly for about 2 weeks. And we argue that this was a matter of short covering rally. So take a look at the charts example of JP Morgan. From about $100, it rallied to 126. That's a 25% move. And I would argue that the people who are shorting is actually just with a risk of about $6 to $10, which is about 5 to 10% risk and a potential 20% sell off from 124 back to 110. So JP Morgan could be sold off. Take a look at the weaker one like GS and MS. Goldman Sachs and my actually in the banks, if you're going to be more stock specific, it's easier to short a Goldman Sachs because Goldman Sachs has lower consumer banking and is more investment banking reliant. And we know that Morgan Stanley and Goldman Sachs are suffering more than 50% decline in their investment banking fees and is still expected to slow down their investment banking fee revenues next year. So from a short side perspective, you will want to actually short Goldman Sachs at 337 all the way till 360. So let's just actually try to write it down. GS short at 337 all the way to 360, either through shares or through selling calls. So you could do the following thing. Inverse fund for the bank, since it's already an inverse, you could buy 2180 till $20. So through shares or calls. So that is something to actually consider. Now, it doesn't have to be strictly 337, so about 330 to 360. So you've got about a 10% range to sell for Goldman Sachs. Let's take a look at your Morgan Stanley here. You can clearly see that there has been a strong topping out here from $100, dropped to 75, managed to rally to $80, but has barely even recovered. So this was actually a weaker name rather than the other banks. Some people obviously have tried to buy banks because of the net interest margin expansion. So you will see more of a trading range in the banking space rather than a complete sell off. It's like Goldman Sachs is not the same as a Credit Suisse. Neither would be JP Morgan. So just in case you're assuming that, oh, what happened to Credit Suisse could happen to the banks here in the US, it may happen, but not likely in the 95% magnitude. So maybe about a 50% drop is possible with an impending recession. The economy is slowing down. So you've got a potential drop here with Morgan Stanley rallies likely to be sold off. So just showing to you the charts here, Morgan Stanley rallied from about 75 to 80, weaker than a GS or JPM. Let's take a look at Wells Fargo here. Wells Fargo had a very strong run up here from 40 to 45. However, very strong resistances as well here at 45, 46. So we're going to have to show to you that Wells Fargo has massive resistances here. And from a short side standpoint, you might want to actually short it at 45 to 46. JP Morgan would be a good short at 125 to 130. You can consider that. MS, 80 above, short it out. Let's talk about the banking space here. So far, as for a lot of your banks here, banks have been doing a massive run up, but we argue that even the brokerage firms had a strong rally here. IBKR rallied almost to all-time highs here at $80, but it could be quadruple tops here. In case you're looking for a potential short squeeze play here, nearing tops with potential low risks. Take a look at IBKR here at $80. We argue that trading is a cyclical event where most of the traders may actually lower down their deposit accounts to trade the US or to even invest in the US, and highly likely for commission fees or margin fees to also slow down for IBKR. With IBKR now trading at $80, I believe it's already trading more than 30 times multiple. You may want to actually caution and actually be on the short side for IBKR. So let's take a look at that as well. Just I'm gonna put it all here just in case that you want to just a summary. Of course, Schwab has also been a weak spot. Even if Schwab has been rallying here, actually Schwab is weaker. We believe that it is weaker. Take note that IBKR is near all-time highs still, near highs. So that means that had Charles Schwab been with IBKR, it would have been trading here at 95. It's now trading at 80 and 77. Think that Charles Schwab here has leeway for a drop back to $60. So we would be on the short side of the equation here for Charles Schwab. We are ready to pounce on the banks. That means that later on, 9:30 to 10:30 p.m., I would be taking a look on potential sells on these banks. So 80 above for shorting Charles Schwab. So the banking space, we are bearish here. We believe that it rallied. You can see that it made a great rally for the month. Strong rallies on your financial bulls, right? From about 50s, it rallied to 70. There's several ways for you to handle your shorts on the financials. You could either buy FAZ or simply short FAZ. So FAZ is the equivalent of all these banks with a triple levered arc. So you can see that this one has been on a big downtrend ever since, no? So you can see naman that the leveraged funds, when you are shorting, can be quickly sold off. So you can trade that. That was a counter trend rally. We tried to trade that. Nowadays, looks like financials are more on the sell-off, even after their interest income margins growing 40% with the rise in rates. You may want to actually trade this from 70 short, buy it back here at 60 or 50. Seems to have a nice trading bounce. It already made a counter trend rally. So unless you could see the banks actually swelling their profits next year, looks like a thesis standpoint here is a short on FAST here at 70. So either you buy the inverse fund for banks or you short FAST. So let's give that here. FAST short at 70 to 80. I'll be doing summary ideas for October 28th until you can actually do this until next week. So I think like weekly, you've got a lot of earnings coming out. Also, the reason why you want to be a little bit cautious is November 2 is your Fed interest rate hikes. Everyone, of course, expects that the Fed will be raising rates 75 basis points and could even hint another 75 basis points on December 14. So that would be a very, very bad news for most of your companies in terms of the general market, especially technology. So speaking of technology, of course, you've seen how bad the moves of Meta is. It has gone 25% down here at about 98. Unfortunately for Meta, they've been sold down 25% after hours because they lost a $9 billion on Reality Labs. So they are even expecting to lose about another $10 billion on just Reality Labs alone. Their income fell, Meta's income fell 50%. So it's very nasty, and the market is trying to say that they disagree with the massive investments, or rather expenses happening in the Reality Labs or the Oculus division. So the market, just from a trading standpoint here, is still giving Meta a sell signal, and that gap down, unfortunately, may not stop even until $80. So it's a matter of cost efficiency, and the market is still bearish on Meta. So very hard time for a Meta shareholder. What I actually did was I had some shares here at 130. I did sell it at 104. Took a loss on Meta 20 plus percent. I think I lost 20% the next day. So I closed it. Good thing it was like 6% of my position. Not huge, but not small either. So usually I would bet something in the realm of about 5% to less than 10% on that earnings call. Okay, let's take a look at misses here. So Meta falls huge, Amazon falling 20% also after hours. So we're already very careful that the big tech is going to fail. And so one of the ways to actually also react on the earnings negativity of Amazon is to take note that next week you've got Etsy and Melly, as I said. Etsy and Melly and eBay are going to be reporting next week. And for those who are seeing the signs that Amazon slowing down could mean a nasty sell off on Etsy, you may actually make a trading reaction sympathy play here on shorting Etsy here at 100, even as it could rally to 118. So here, let me just show to you a sympathy play on Etsy. Sympathy play in terms of reacting to negative numbers. One of the ways to short Amazon is shorting Etsy, which hasn't gapped down here. Shorting Etsy at $100. Shorting Etsy at 100 to 118. That's just a sign to actually check out. eBay is going to be reporting on the e-commerce side. You can already see that eBay has been selling off. Just from a momentum standpoint, the rally was very feeble. So I think the market is really on the thinking that eBay is going to continually sell off as more and more Americans would be lessening their retail spending online or all spending for all matters. From a charting standpoint, though, shorting eBay at 40 does not look a really nice risk reward. It might be better to wait near 45 before shorting eBay here. Another look on a short would be Mercado Libre. You could argue that Mercado Libre has made a rally from about 600 to 1,000 owing to their good numbers before, but has been market has been selling it down even after those good numbers as they forecast lower guidance and lower earnings next year. So you're already seeing advanced selling pressure here at 850 for Mercado Libre. And that's something to actually watch out on. Next week's numbers on Mercado Libre could actually be selling on the downside. So that might be a situation to take a look at. Now, this might actually surprise you because Shopify was up 17% last night. There was actually better cost management. Shopify still lost money, but they lost less money. Nonetheless, Shopify rallying back towards previous resistance areas of 36 to 40 is still a recipe for a potential short. So short Shopify at 36 to 40 if you get a chance. So we're actually just following really where the trends are more likely to be. There's a question. Hi. Any insights for next week for Philippine stock index? Is the Philippines likely to be affected by the policy rate hike? And the answer is yes. The markets will actually so far be pricing in more negative headwinds for the Philippine economy as higher inflation in US will also translate to higher inflation in the Philippines because we do import quite a lot of commodities, whether it be oil, whether it be beef, chicken, vegetables, and so on abroad. So that's really going to be a tough time for Philippine stock index continually it could continually sell off. The one thing that I've been noticing is obviously stock specific strength. So we argued last week that Coca-Cola was going to be strong heading towards earnings, and indeed it did go up. You'll notice that Coca-Cola went from 54 to 59. The question, though, that I will be watching out on is whether people will be taking profits. I, for one, which has Coca-Cola, will actually be taking profits today. I was taking profits last night on Coca-Cola. Perhaps the staples will actually be not necessarily shorted, but it will be also sold off. So be careful on consumer staples. Consumer staples rallied from 66 to 72, which was which was an 8% rally. And as you well know, even the consumers are having a hard time to buy more goods, whether it be P&G products, Coca-Cola products, or even if they continue to snack, people are actually skeptic of how strong these will continue. In terms of, if in case you are wondering on the consumer staple strength, you may actually want to be trading the ranges of PepsiCo, wherein higher resistance moves here at 179 for Pepsi may actually be more of a short. So this one, I'm not quite sure, but I will be on the watch out because is consumer staples also gonna be sold off after tech slowdown? So that means that although XLP, which is still trading at $72 today, you've seen how McDonald's was able to hit $270. My question though is whether it can hit all-time high. I think that McDonald's, these rallies may actually be a setup for a short by the market. So we will be a bit careful on even these names that have outperformed. So on that side, that means that potential resistances for XLP at 72, potential resistances for Pepsi at 180, uh, probably sell McDonald's at 270. So there are a lot of pricey defensives here. Take a look what happened to your PNG. Perhaps after rallying towards 132, we can still see a sell off here from 150, 140, and might actually be more of a sell area here at 132, 132 area. So for those who still are looking at defensives, I think that the market is actually profit taking them. So be a bit careful on any defensives. Even AT&T, which rallied 25%, it may seem actually that this might actually be taken profits from. Take note that from about $15, it has rallied to about 18.4. I did sell at 18.2. I might actually be on the sell side here already for the defensives. There's also a gap down here for AT&T. So be a bit careful even on the dividend yield names, even as people are hiding into them. This is one reason why I said that I know that energy is strong, banks are strong, staples are strong, but with the weakness of technology stocks, with last generals selling off, you have to be very careful. Next week, actually, as we said, AMD and Qualcomm are going to be reporting numbers. From the setup here, it looks like the market is already thinking that they will continually sell down to new lows. And with AMD going down to new lows, NVIDIA is also being shorted here. It didn't even rally to 160 at 131. People are already thinking that NVIDIA is going to fall yet again back to new lows. So for those who are looking to short a semiconductor, let's give you ideas here. Possible shorts already for more new lows to semicons. So here, from just a setup standpoint, NVIDIA at 130 to 140 is giving a better deal on the sell side rather than an AMD. Next week, Qualcomm reports numbers, still a dividend name. However, you'll notice that just as of last night, people are selling even these names. You can see that bearish engulfing here on your Qualcomm. So there are several ways to short this. A lot of people usually short semiconductors through semiconductor shorts. And it's very clear that tonight, if you wish to buy SOX S, which is semiconductor shorts, after dropping from 90 towards 58, we are already seeing the signs that SOX S is starting to be bought. The bears are coming back. And so we have to argue that for tonight, buy stocks S at 63. I could go on which companies to short, obviously. So let's go through these earnings that came out and what is the analysis. You'll notice that Chipotle here, after saying that they are a social status indicator, wherein only high income spenders are going into Chipotle and low income Americans are not anymore going into Chipotle. With Chipotle's valuation still expensive here, a lot of people have started to sell it off. You can see that from 1567, it's now at 1466. Taking a look at that, not only is Chipotle the company that you could actually short, what this is saying here is that if the Americans cannot really dine out, it's actually gonna be very bad for other companies, including Blooming Brands. So Blooming Brands has an earnings report this day, October 28th, in case that Blooming Brands, which owns TGIF, is Outback. If they're gonna have some problems here, perhaps you're at $23. There might be a chance to sell Blooming Brands. This is the brands of Blooming Brands, BLMN here. So Outback, Carabas, Flamingo, Bonefish Grill. Sorry, yeah, TGIF is a different company. But yeah, you might actually see some sell-offs on Blooming Brands here. So we're seeing signs that spending is not as good. So you might actually start looking at potential sell-offs on Blooming Brands. So let's just show to you these charts that could actually be open for some setup to the downside. Chipotle was one, but McDonald's is another. Would it mean that Domino's Pizza, after rallying from 300, might actually be starting to sell off as well? And with next week's numbers for Papa John's, Cheesecake Factory, Starbucks, what does that bode for this sector? Let's take a look at the charts here of Cheesecake Factory. The setup before the earnings for next week for Cheesecake actually managed to rally from 28 to 34. Should it actually have a bad number, it's going to be very bad for Cheesecake. So the setup is actually priming for some shorts to take advantage, no, on the fast food side. Let me show to you all the charts in the fast food or the dining sector. Let me show to you my watch list there. Because we're coming out with fast food numbers, more numbers in the fast food arena is coming out next week. Here, let's show to you. So as of last night, well, Lock-in has a different story here. Lock-in Coffee is a small float in China, and they've come out with some products like apple aomori and some coconut latte that supposedly sold more than 15 million cups in a few months. So there was that indication of short covering further. I don't want to touch Lock-in Coffee. It was the accounting fraud. So it's very hard to trust, and I doubt that the U.S. is gonna actually come back, or foreign investors is gonna play a game on Lock-in Coffee. Nonetheless, we are seeing actually, if you just take a look, McDonald's numbers was good. Shake Shack is reporting next week. So far, the markets in US, even with negative headwinds on technology stocks, managed to still rise. In fact, I'll show to you the performance for the week. A lot of fast food names went up, especially Wingstop. Wingstop was up 26%. Beyond Meat was up 15%. Take note that most of these names were rallying on account of a short covering. Wingstop was actually a short covering rally after some blast off on numbers. There was a good number, but I'll show to you that even if there was good numbers on Wingstop, it could actually stop somewhere here at 170. So we should be careful even on very strong numbers. As I said, Charles Schwab and IBKR, even the banks managed to beat expectations. But after a 20 to 40% move, there might be a chance for people to actually sell and take profit and then be on the short side. So we will be a little bit careful, as Wingstop is now tempting here at about 170 areas for a potential sell area. Potential, I didn't say that it will be a short, but you should be on the watch here. Let me show to you about the fast foods, no? Lot of fast food and dining out spending concerns. Of course, next week we'll get numbers from airlines and travel sector. So people would assume that the numbers of Airbnb, Expedia, and Booking will do well. The question is, will markets sell off after earnings, or will they buy more after earnings? My sense is that the setup so far is that people are gonna sell off. You are already seeing some weakness on Airbnb prior to the numbers getting released next week. Take note what's happening on Expedia here. Weaker than Airbnb. Actually, probably trying to tempt to new lows. So it seems as if the market is seeing that the signs from from Amazon could potentially spell heavy negative headwinds for next year. So possible sell-offs on a further new low for Expedia here, even as the travel sector is trying to rebound. What this is saying is that the tourist arrivals could actually slow down to America, to the world next year as the world battles inflation. They're trying to forward guidance that, although it hasn't been said, we are assuming just from the charts, what the charts are indicating, how people are betting based on real-time prices, that they're quite bearish for next year. Expedia looking to hit new lows. Booking here after rallying is actually potentially also a short. So, given the fact that these are next week's numbers, how do you play this out? With the consumer discretionary spending, on the negative side, there are several ways to handle this. TXRH, which is your Texas Roadhouse, came out with numbers that wasn't so bad. They actually beat numbers. But as I said, even if you beat numbers, the market may actually start selling you off, especially if you are near all-time highs zone. So Texas Roadhouse here, which is not, of course, gonna be immune, may actually be shorted at 100. You've got possible concerns on your consumer discretionary spending. So in terms of consumer discretionary spending, that would be XLY. Take note, very weak here at about 145. It didn't even rally to 156. So there will still be a lot of selling pressure. In fact, Tesla will be sold off along with the Amazon drop. So Tesla, after rallying here to 225, may actually be sold further on after those numbers from Amazon. So what I'm saying here, guys, is there's a lot of sympathy play that you can react upon. It doesn't mean that Amazon's numbers are bad, that you short Amazon. You could actually short companies that are yet to report earnings but have a similar industry or a similar type of customer that will get a massive sell-off next week. And that's how people infer. That's how people usually infer. That's how I've been trading, reacting rather than predicting, because it's easier to react wherein you already have the data that's bad and then you just react towards the same sector. That's how other people handled the JP Morgan and the Bank of America surprise. And if you'll notice, if these banks were surprising to the upside, the natural momentum is to rally first before selling it off. Okay, so so far that tells you that with the consumer discretionary spending concerns and e-commerce concerns, these are all likely a short na after rallying. So McDonald's, even Wingstop, which rallied very well, could actually be shorted at 170 above. Of course, we are more bearish on Beyond Meat here after rallying 15%. Later on, if the market will sell fast food, you will probably see new lows on Beyond Meat. Nonetheless, even if I'm bearish, just the fact that it's 95% down, I usually short the ones with a lower risk rather than those with potential squeezes. So I'd rather perhaps short a McDonald's or even a Domino's Pizza. Now, Starbucks gets released next week. Chances are a lot of headwinds here. So 85 to 90 for Starbucks would actually be a potential short. So short at 85 to 90. Usually, there are several ways to short this properly. I prefer selling calls so that I could just collect yields. When I sell calls, so I try to get 5 to 10% yields on the higher end resistance. So for instance, for Starbucks, your resistance is 91. So I'd like to sell 90 calls and probably try to get $9 for a 2 month area. So today is October 28th. That means until December 28th. So 2 months. Try to get either November or December areas. Try to get a 10% yield on selling calls for these types of companies. Of course, an interest rate hike is something that people are betting upon due to the very high inflation, just to stop inflation, as if inflation can be stopped. So there are still a lot of concerns here. So you've got XLY at 145 to 155 as a short. um, Tex Roadhouse Wing. We talked about Kura Sushi being very expensive. Kura Sushi is currently here at about $80. We might want to actually try to short this before the numbers come out, even as it could rally to 95. So some are actually gonna short before the numbers. So let's show to you sectors here. Ruth Chris Steakhouse. So a lot of them actually benefited from short covering, and a lot of them have benefited from the thinking that because of COVID pandemic restrictions getting over, more were actually going out. So that is true, but at the same time, you've got some headwinds coming out for next year. So it's a battle, and demand could actually be destroyed, such that if you are planning for where to sell, most of the fast food and dining out sectors continue to trade. At least in the U.S., they still trade near their highs. So you might, or they have a distinct lower high, which you can actually sell. Would you want to sell a new low? In terms of new lows, yeah, Domino's Pizza and Papa John's. Showing to you the chart of Papa John's here. This is a weaker chart. You'll already see that Papa John's is expected to hit new lows for next week's numbers. Papa John's is teetering to new lows. And usually, with the consumer spending really negative, it's up to you on whether you want to short a company that is poised to hit new lows. Shorting pizza at 70 to 75 would still work. Let's talk about those dining out spreads. So Darden here is the owner of Olive Garden, Applebee's. It's trading actually near highs here at $140. You may actually want to short that euphoria. I would argue that this strength could be actually shorted. $140. Do it through sell calls. Okay, so dry Darden. Another idea on the short side, we talked about the companies that are reporting for next week. So you've got Yum Brands. So for Yum Brands, kasi, they haven't rallied quite significantly. They're still at 114. It might rally further to 117 or 118. Yum China could be sold off already, just the fact that it's a Chinese brand. But I think the Chinese names like Yum China might actually still rally to 44, but eventually sold off. So if you'll notice, my 9987, which is Yum China in Hong Kong, was already sold off tonight, no? So because it was already sold off, there's no margin of safety if you short it. So yun, pipiliin mo rin eh. Amongst the companies that are yet to report, I find it easier to short a company that's nearing resistance. So ito, Shake Shack, where is it? Is it near the support or near resistance? At 53 or 55, it's near resistance. So I'm more willing to short a company near resistance, near the upper end. What happens if it breaks out? Could it handle something like a Netflix wherein it actually moves way beyond? Possible. That's why there's two ways to handle this. Either you sell after the earnings. So, for instance, we already saw McDonald's and Chipotle, good earnings, but if McDonald's gets sold off, chances are that Yum Brand will also get sold off. So, you have to watch out what people will do if McDonald's hits 270. These are still being parked as a safe haven, although I don't know if there will be real safe havens except cash. I think that the only way for you to make money in the market is to trade, wherein you need to buy low and sell high, or you sell the low for that it will go lower, or really be on the momentum side of energy things. Are there really no plans to decrease the dollar supply and only increase interest rates? They have been tightening. There is a quantitative tightening bond plan. So far, Bank of Japan has been trying to help the economy as Japan's inflation is teetering 33-year high inflation. But that actually will make dollar yen, because of what Japan is doing. If you try to help your economy and try to print money and try to buy bonds, that actually is very detrimental to the Japanese yen. So although the Japanese yen hasn't broken to new all-time weakness, you are already seeing that Japan is actually in a worse state rather than Philippines or even UK. So Japan has been underperforming the entire world. It's been depreciating. Their currency in Japan has gone from 116 to 147. It has devalued nearly 30%. And unfortunately for Japan, they seem to have no way but to actually continually depreciate their currencies next year. And a lot of people are actually concerned for another 10% devaluation for Japanese yen. You may actually see Japanese yen hit 160 for next year. That means that people will continue to flock to the dollar. So far, let's take a look at the dollar and the treasury bond crisis. You're seeing that the dollar here continues to still remain on a very strong uptrend. You're seeing that people are, even with the Rishi Sunak new prime minister, GBP USD is actually teetering here at a lower trend. Some people might actually start shorting the pound tonight. So tonight, actually, despite any earnings that will come next week, the market is already trying to rotate back to the dollar, trying to rotate via selling even the staples. We'll see. Of course, they've already sold technology. And in terms of technology, if you take a look at the movements, Twilio looks to be, which is reporting numbers, is very much in the downside. No, it looks like a chart of Credit Suisse that's down 95%. So it seems as if the market with the which this Twilio is down 86. Who knows if it goes 95% down next week, another sell off. So I wouldn't try to predict this, but the way that the charts of tech is moving, it looks like further sell offs next week would be happening. Which is why the best way to safeguard yourself is actually to short the SPY. Take a look at the SPY here is still near resistance. So SPY 379 is still a sell. Let's give you some ideas to short the index here, just to help yourself. No, buy the SOX S at 63, buy the SPXS even at 24 to 25. So to short the S&P 500, you can do it through an S&P 500 there. Here you can clearly see that that massive uptick last night, 23.8824. So people are buying a lot of shorts here or inverse funds. So you want to buy that at 24. You want to buy SQQQ. Actually, SQQQ continued to go up last night as people kept on shorting the Nasdaq. So from 50, it has rallied to 55, and it might continue all the way to 67 or 70 something as the market is pricing in lower lows for Google, lower lows for Microsoft, lower lows for Apple, lower lows for Amazon, Meta, Tesla. Actually, the market is heavily bearish on these FANGs. That it seems like the path of least resistance is to continually buy all of these inverse funds. So SOXS, SPXS, SQQQ, FAS, those are just a few of the inverse funds that we regularly talk about in terms of shorting. Now, if you are going to be bearish on a lot of the flights next week, there is a travel inverse leverage fund, which is FLYD. This would be shorting your Airbnb. This would be shorting your booking.com. So let me just show to you that the way to short that is FlyD. So you could actually buy FlyD at 12. You can also be shorting Booking at 19. So booking.com is near resistance here, 1819. So 1833 to 19 is a short. People are looking to short Airbnb despite the recent strength. No, so hotels have been quite strong over the past couple of months, but the market is trying to attempt to short this for next year's potential slowdown. So this one is trading at 112. Looks like the market is already trying to short Airbnb even at 112. So 112 to 120 is already giving short signals. So so to recap, let's repeat our ideas for you. With the market showing still more signs of weakness, what we would like to do would be buy inverse funds. We would like to initiate some shorts on the banks, whether it be on Goldman Sachs, Wells Fargo, JP Morgan, Morgan Stanley, Interactive Brokers, Charles Schwab. Take note, I forgot to mention here that we do want to short Coinbase and MicroStrategy with numbers coming out next week. Your Coinbase is trading here at about $72. Maybe it can rally to $80 or maybe not. Looks like after even a 90% slow sell off, these stocks could actually fall the way most of the bear stearns essentially eventually did. No, so this looks to be a sell off for Coinbase. Crypto sell offs. So one of the ways to short I would be shorting coin. I usually short Mara and I short yeah, so Mara would be a short at 13 to 15, MicroStrategy to 7300. This one for Coinbase is a short 72 to 80. So next week you've got SoFi reporting numbers, fintechs reporting numbers. You can already see how negative the charts are, and even if they can actually squeeze a la 15%, the trend is on the negative side. So if you're going to be shorting, although I won't short SoFi, I think that the fintech sector still needs a lot to prove because fintech is a function of digital payments related to digital spending. Take a look what happened. Even as Visa came out with very good numbers, here at about 205, it seems to have been suffering some resistance already at 207 to 216. So I'm already just showing to you that if e-commerce is slowing down, that means that there are very much headwinds in a lot of your e-commerce stocks. Your Coupang here is trading at 17 to 19. This might actually be a good short. So let me just show that here on e-commerce. Short Coupang at 17 to 19. So yeah, a lot of ways to actually short discretionary spending. You can do it through travel platforms. You can do it through hotels. I forgot to say. So Marriott comes out next week. Marriott would probably be a sell signal here, guys, with earnings coming out next week. After rallying from 135 to 156, I don't think that people will actually bet on a positive move on these consumer discretionary spending. It's here. You may actually want to short Marriott at 160 to 170. So yeah, so I think that there's really a lot of awful things that will happen. Thanks for those likes, guys. If this is your first time, please try to like this so that the viewing of Awesome10X updates can be seen by more people. Thanks for watching. But we will continue to still be on the cautious side here. We do believe that we were just in a bear market rally, and so if the bear market rally tops out here at about 3,850 for the SPY, we could fall back to 3.5 or even worse, going to 3,200 or 3,000. So prepare yourselves as next week's numbers could actually continue more to the downside. Thanks as always. Bye-bye.